basically, here's a question about NRV. It has everything you need. I'm gonna let you find the information yourselves because I think it's very important in these types of questions, like you have a whole paragraph, and to just dig out the information yourself. Obviously, like you basically need to find the joint cost allocation using the NRV method, but I'm gonna go through all three so that we solidify our knowledge. Okay? So I have all three prepared, but for now, just do the NRV. Okay? And let me know when you are done. Okay? And also I added some variable and absorption cost slides. The thing is, like, again, I saw your comments about variable costing and absorption costing in general from the crash course. There's nothing like, understand that you want me to go more in depth. I'm gonna try my best to go through it in as much detail as I can and give you as much knowledge as I can. But in general, variable and absorption costing is just about, well, I'm going to talk about it later, but it's not as detailed as you think, and it's not as difficult as you think. That's why there's nothing like, I'm going to go through it again either way, because I know we covered it quickly yesterday. But yeah, NRV, no. There's two methods. NRV, there's three methods, right? We have physical measures, then we have sales value at split off, and then we have NRV. Right? So sales value at split off is right after the split off. Yeah. So the NRV is after the accounting for separable costs. Yeah. Okay. Yes. Yes. Okay. I'm going to leave the variable absorption costing topic. I'm going to leave you to this. Okay. Okay. I'm going to give everyone like one more minute. Okay. And then we're going to go for it. But I think you know what you're doing. Yeah. But one more minute. Okay, I think we can go through this, right? Yeah, I've got some answers. So basically, yes, correct answer is C. And I have three methods listed out here. Okay, so first one, NRV, right? Basically, um, again, you know this. We have 2 points at which, in general, we can measure methods, right? Straight after the split off, where one raw material splits into two. At that point, you have two methods that you can use. You can either use the physical measures or the sales value at split off. The sales value at split off is just your number of units produced, right? Multiplied by the sales value at the split off, right? Price right after the split off. Your NRV on the other hand, also includes the separable cost as well, right? So it includes the 10,000 and the 12,000. Hence, your value here. So you have 2,500 units of good A produced at the split off and 3,000 units of good B produced at the split off, right? You have to multiply that by the final sales value, like sales value of your final good, price of your final good, which is the 60 and the 104 respectively, right? So for good A, your net realizable value of your finished good, like income of your finished good, is going to be the 2.5K of materials times the 60, right? Which is the price, minus the 10,000 separable costs, right? So you get 140K. Now for good B, you're doing the same thing. You're multiplying the final price by the amount of units produced minus the 12,000 of separable costs, right? Everything is in the whatever, the paragraph, right? Then you allocate the percentages. Yeah, so here it's done kind of separately, the percentages and then the multiplication by the joint cost. But in terms of your percentage of joint cost that your good A is getting is the 140K of the income, right? Divided by the total income from both goods, which is 440K. And according to my calculations, you get 31.8%. Yeah, so you allocate 31.8% to good A, and therefore you allocate how much? 68.2%, 68.2% to good B. Yeah, then you simply multiply these percentages by the amount of joint cost that you have, which is the 192K stated in the beginning, and therefore you're allocating 61,000 to good A and 130,000 to good B, and all, yeah. So to good B, 130,000 should be going, which is exactly your answer C. Yeah? Constant gross margin way. The reason we're not covering it is because we haven't seen it in exams for the last 5 years. Okay? Yeah. That's why it's the least likely to come up on the exam. I don't think it will, honestly, especially in the midterm. That's completely not what they want. These are the three main methods, okay? And again, the physical goods, you know this. We just take the percentage of the amount of goods that we produce. Yeah, very easy. You just look at the units. And for the sales value, it's split off. The difference is between the cost. So pay attention to like the different steps in the process. Obviously, here it says that the price straight after the split off is 40 and 80 respectively, and it's stated first in the paragraph before the cost of the finished product, but sometimes they mix all the information up, so it's quite difficult to tell. So just pay attention in the question that it says that these prices are straight after the split off. Yeah. And of course, we don't need income necessarily. We just need kind of the sales value or the profit straight after the split off. Therefore, we simply just take the price without the separable cost calculations, right? After the split off, we don't have any separable cost, just the joint cost that we need to allocate, right?